On this channel, we cover the most revolutionary early stage technologies and how to capitalize on them as investors for the long term. And there is no more revolutionary technology than artificial intelligence. It's just a fact, right? Now, it might be harder to capitalize on AI and get that massive return where some of these earlier stage, less known industries like maybe nuclear energy, maybe crypto, but artificial intelligence has the most disruptive power of any technology of any industry, which is why we just have to stay informed and stay on top of the market, right? So one of the ways of playing artificial intelligence is through biotechnology. A lot of these industries are going to be adopting this revolutionary technology. A lot of these industries are going to be completely disrupted and revolutionized by these technologies. One of these industries, biotechnology. AI discovered drugs will be for sale sooner than you think. It takes forever to get drugs on the market. AI can help speed up the process. In one example, scientists trained their AI model by introducing it to approximately 2,500 molecules, 1,700 of which were FDA-approved drugs and 800 of which were natural products. Once the researchers trained the model to understand which molecules could kill E. coli, the team ran 6,000 compounds through the system, including existing drugs, failed drugs, natural products, and a variety of other compounds. This is what artificial intelligence does, right? It processes data and draws links between this data way faster than at any time in human history. This would have been impossible when the pharmaceutical industry was just developing, right? Like 50 years ago, right? This is next level research in the pharmaceutical industry. So a lot of these companies are capitalizing on this. There are early stage biotechnology companies out there. Bayer is not one of them, but this is another example. Bayer is rapidly expanding its footprint with artificial intelligence. Among its latest ventures is its extensive work with AI, specifically in partnership with Google Cloud to optimize its core pharmaceutical business. One key focus area of this work is improving the clinical trial and drug discovery process using Google Cloud's tensor processing units. Bayer hopes to leverage this technology to execute large quantum chemistry calculations and unlock new insights accordingly, right? So there are different ETFs made up of biotechnology stocks that are in the very early stages. And a lot of these companies obviously are super risky, but when taken in ETF form, when you see how beaten down they are, you think about the upside once artificial intelligence revolutionizes this space. And we have food companies. DoorDash follows Wendy's with an AI-powered order taker. DoorDash believes using AI could boost the bottom line without sacrificing quality. So what these companies are doing, not just food companies, but these companies are doing, DoorDash announced today the launch of an AI-powered voice ordering system that it says will enable restaurants to increase revenue by ensuring that no customer calls go unanswered. The AI technology will also provide personalized recommendations to customers to boost the value of each order. So talk about making an AI conversational bot with live agents, okay? And so obviously this is not great for the long-term outlook for minimum wage jobs like customer service jobs, but we have to stay on top of what is going on, right? Because the wealthiest people of any generation are those that control the dominant technology. It's just a fact. Who are the wealthiest people of our generation? Elon Musk, Bill Gates, Mark Zuckerberg, and Jeff Bezos, right? They control the internet and technology. So whichever company controls and utilizes this revolutionary technology the best is going to win. AI stocks, tech giants, cloud titans, chip makers, battle for an edge. So let's just dive through a quick summary of a whole bunch of different companies and what is going on with these companies. So we have cloud computing giants, Amazon, Microsoft, Alphabet, selling AI analytical services to business customers. ABI Research forecasts that generative AI will generate $450 billion in business-to-business value by 2030. Then we have chip makers like NVIDIA. NVIDIA smashed estimates while its outlook top views. NVIDIA is cornering the market on these powerful computers required to power artificial intelligence software. OpenAI, which Microsoft owns, reportedly is on track to generate over $1 billion in revenue over the next year. Obviously, great for Microsoft. OpenAI's dominance faces a challenge from open source large language models. For example, Hugging Face is an open source community that offers tools to enable users to build large language models. Hugging Face recently raised $235 million in a Series D funding round. Investors included Google, Amazon, NVIDIA, Intel, Qualcomm, IBM, Salesforce. This is going to be a massive company whenever that goes public. Probably won't be early stage though. Meanwhile, chipmaker Qualcomm, which is a public company, plans to build Snapdragon chips that can process AI tasks directly on smartphones without the aid of cloud computing resources accessed via internet connections. If they pull this off, this is massive, right? Because what are two of the most revolutionary technologies in existence? Smartphone technology and artificial intelligence. If Qualcomm can marry them together, it's going to be one of the most valuable companies on the planet by far. Now, again, Microsoft owns OpenAI. They own ChatGPT. How are they leveraging this? In addition, Microsoft continues to leverage its strategic stake in OpenAI as it aims to take on Google and internet search and office productivity tools. Remember, Microsoft owns Microsoft Office, which everyone uses, right? Microsoft introduced higher than expected pricing at $30 monthly per user for its Copilot AI software tools. While Microsoft 365 Copilot is still only in a limited preview, we're not baking any monetization into our model yet. It's clear that M365 Copilot and future AI pricing uplifts will be incremental to Microsoft revenue. So they're going to be integrating artificial intelligence into Office, which everyone uses literally, right? Some of these companies are just extremely valuable because they own this technology. Now let's take a look at some of the slightly smaller companies, right? The smaller the company, the less capital required to boost the price. Bigger the market cap, bigger the company, the more capital required. So it's a lot easier to move the price to the upside if the market cap is small. Some analysts view computer gear maker Arista Networks as a long-term AI play, and internet data centers will need more computing power and network bandwidth to process AI workloads. That is what Arista Networks does, and the stock just topped expectations. AMD, a competitor to NVIDIA, on June 13, unveiled its new Instinct MI300 series chips that it says are fine-tuned for speeding up processing for generative AI, the technology used by ChatGPT and other chatbots. Broadcom, Marvell Technology are other AI chip makers to watch, while Broadcom expects its AI-related sales to double this year, right? Other parts of its business are slowing down. Artificial intelligence stocks to watch include information technology services firms such as IBM, Accenture, in EPM systems. These companies are investing heavily into artificial intelligence. So we're going to have to stay on top of this market. So much going on across the spectrum in revolutionary technologies.